and welcome to Lonsec's market update for April. Firstly, we'll look at latest developments and then we'll turn to the outlook. The major recent development has been the US Federal Reserve delaying its interest rate hiking cycle. Despite the US data being quite strong in recent months, it's pointed to increased global risks as a reason for delaying the rate hiking cycle. As a result of that, the US dollar has fallen. We've seen bond yields move lower across the globe, particularly in the US, and the US market has continued to rally up around 12% now off its low in February and travelling around the 2040 mark at the moment. Commodities have also benefited from the US dollar retreat, and outside of the US, we've seen that Europe, China and Japan basically remaining stable at this stage and not deteriorating any further. If we look at Australia, we see that also the data has picked up recently in terms of the business conditions. Business credit growth has been expanding, and we've even seen the PMIs here tick well above 50 to 55, which is showing expansion in the manufacturing sector. The RBA has been on hold, retains an easing bias despite that the currency being stronger lately. And it looks like the government is looking at an earlier election, threatening an early election with a double dissolution possibly being triggered by the Senate, and a May budget being brought forward early, which suggests we're probably going to see more of a pro-growth budget coming up. We've also seen that there's been some pressure on the banks lately, with Arium going into voluntary administration in Whyalla, with the banks holding a bit over $1 billion in exposure to the debt of that company. And there's also been some legal cases, negative cases against the banks, particularly Westpac, and the rigging of the bank bill rate has been causing negative sentiment towards the banks. So turning to the outlook, we'll see that the US recovery does look pretty solid. We've seen the payrolls are still strong, GDP is pretty okay, and one area we were worried about were the PMIs being below 50. They've started to tick up closer to 50 now, which means closer to expansion, and it does seem that the winter harsh conditions did hold down the manufacturing sector over January and February. In Australia, it's been similar actually, where business conditions have actually ticked up in the last couple of months in terms of business credit growth, business conditions, and also our PMI here is up to 55. So manufacturing is actually quite strong at the moment in Australia. So from the US-Australia point of view, things are looking pretty good. It's outside of those countries though. When we look at Japan, China and Europe, that's where most of the risks lie. There's uncertain outlook for those economic areas at the moment as we speak, but they do seem to be stable, as I've mentioned. Next items coming up on the calendar is the US reporting season for the March quarter, and then we will move into the May budget, which has been called earlier for Australia, and then possibly Australian election coming up sooner than expected. Then we have the banks also reporting in the May period, so it'll be interesting to see how they're going given the the negativity towards them at the moment. And then the other issue will be the Aussie dollar. Will it settle down a bit? It's been rallying lately, and we really don't want that to rally too strongly because it's supportive of exporters. And overall, we're just retaining optimistic view on US and Australia after the recent data, but the rest of the world still remaining cautious. From a tactical asset allocation point of view, retaining a defensive stance as a house with a general underweight equities position, neutral bonds and property, and overweight cash. That's it for Lonsec's April market update. We'll be back in May to see how things pan out.